Tackle today, Matt and Mark Justice bringing you all the charts, the key stock news, economic updates, commodity updates, so you can have all of the informed decision to navigate your trading day. Slew of economic data, a few stock stories. OPEC has some news. We're going to break it all down. We're going to start with the technicals first. As we go to the S&P, Matt, a little bit of weakness, obviously, in the charts right now, breaking some intraday support levels as we head into the non-farm payrolls. What are you seeing on the charts right now?
Yeah, market's shown a little bit of weakness, obviously, after that rout on Tuesday as the market came, as we opened the week on Tuesday, a little bit of volatility due to NVDA. We'll talk about NVDA here in just 1 second. But technically here, you're looking at a support build. And now on the intraday side of the equation, you're looking at a little bit of a support violation as the market continues to try to test back up after that rout on Tuesday. But it certainly cannot hold a bid throughout the day, and that is a little bit concerning. And you want to see that turn around first and foremost. As you can see, the market tested up yesterday on the cash open, couldn't carry that bid throughout the day, and came right back down to where it kind of started in the market, creating a doji yesterday. Had the cash open get supported as well, but then a turnaround story midday as you're seeing a little bit of downward pressure on price on the intraday side of the equation. And quite frankly, that's what you want to see first, regardless of whether or not we see that on the labor market data tomorrow or something around the bend next week. You're going to want to see that turnaround story on the intraday side of the equation, because what you're going to be looking at this is a pullback scenario. And in any pullback scenario, you're doing two things. One, you identify the catalyst of where the market can turn around from a technical perspective. That was at that 550 level. Now you're seeing a little bit of a violation of that 550 level. You're seeing that same thing on the weekly chart. So where can that market come back down into? Well, you really don't have another support level until about 540. So you do got a little bit of a distance here for the market to test underneath from a technical perspective. If we do not recover the price action today, it does look like the market wants to sell off a little bit more. And once again, you don't have a lot of support until you get into around this 540 level. And so you broke support against 555. Where did you go? It went to 550. You wait for a turnaround story with confirmation. It has not occurred yet. Where's the path of least resistance? To the downside, where's the next stopping point? 540. Now, once again, that's with the confirmation close underneath that 50 period moving average, combination 9 on the weekly chart. If you hold that, you're going into tomorrow's print with the confirmation candle above that 554 level. So technically, this is a technically compelling story, but you got to let the technicals play out. And in any retracement scenario, you never catch that proverbial falling knife. You let it hit the ground, and then you pick it up with confirmation. That's the story we're going to be covering over the next couple of days, including labor market tomorrow. This is a technical story as much as it is anything right now.
Yeah, absolutely. 100% agree with that. We will continue to break down the technicals in depth in all of our product lines, Traders Lounge, newsletter, and of course, highlight them every day. And Matt, in the midst of all of the technical battles, we're going to have catalyst. Tomorrow, we have the non-farm payrolls report that is highlighted. I've heard individuals state the most important economic report of the, insert year, century, decade, certainly of the month. One might argue, and we will break that down tomorrow. We had a slew of data today. Now, 3 of the 4 reports that came into today beat for the bulls, for the soft landing count, for the recession postponed, jobless claims came in at about the same range that came in for several months now. Services data, and it should be, while manufacturing data has been weak, services data, which represents a larger part of the economy, has held up. Both of those data points came in above expectations. So 3 for the Armageddon postponed, but the ADP employment numbers did miss. And this has been labor market is front and center in market participant minds. Unemployment report tomorrow sets up expectations that we might get a miss tomorrow in the unemployment number if it aligns up with the ADP. What's your take on the numbers overall, Matt?
Yeah, I think the concerning part of the data here today is obviously on the labor side of the equation. ADP came in with a significant miss, 99K versus the 144 expectation. This is on the backs of a jobs JOLTS report yesterday that was also the lowest reading in job openings in the last year as well. Obviously, the market is concerned on the labor side of the equation as the Fed has signaled that they are anchoring against the labor market data. And so I'm not sure if the labor market data tomorrow is the most important economic print of the year. I think there's been some CPI prints, especially in the first quarter when we were having the double dip inflationary conversation, that were extremely important. So I'm not sure it's as important as people are thinking right now, given the fact that there is a shift in the probability to a 0.50 cut in September. And so I wouldn't put it as important as some of the early year CPI prints, but I certainly do agree that it's the most important report of the month, and it's certainly the most important report going into the central bank September policy decision.
No, and so we're obviously in tackle today, tomorrow. We'll break that down, including the price action and where we're at. A pretty light economic week next week. Narratives will be set heading into the weekend for the next 7-8 trading sessions after tomorrow. But we'll break that down tomorrow. Matt, stocks in the news. What do you have for us today?
Yeah, we got a couple earnings reports, and then NVIDIA just continues to be in the news. First and foremost, AI, which is C3.ai. It's a leading AI component. It's one of the major AI names out there. They are a pure AI play, whereas NVIDIA is obviously the kingpin of all the AI conversation, but they've got a really, really big company that does a lot of different things. Same thing with Amazon, same thing with Google, same thing with Apple, same thing with all those big dogs out there. When you're talking about AI specifically C3, that's all they do is AI. That's what they do. And they came out with a miss. Excuse me. They came out with a loss here today on earnings 0.5 against the expectation of a negative 13 cents. That's actually a really good beat against the expectation. They also beat on the revenue side of the equation. They reaffirmed forward-looking guidance, Mark. This is not a bad raw numbers report out of C3, but the price response you are seeing out of C3 has been a gap down scenario. And that's what I have been seeing ever since NVIDIA reported in AI type names or anything that is loosely tied to AI. Is the reports, there's been a couple reports that saw a drop in guidance last week. There was a couple reports that saw an increase in guidance last week out of the AI space. C3 is obviously one of those big names as well. And they came out with beats here today and they reaffirmed forward-looking guidance. It's been a bad week to report earnings, number one. If you wanted to report earnings, reporting earnings 2 weeks ago was probably preferred. The market had a little bit of a bigger appetite on the demand side of the equation. So we are dealing with gap down scenarios in many names in earnings in the last week and a half. What's going to be interesting is to see what these companies do in any secondary follow throughs, especially from an AI perspective, meaning C3, because of, again, the gap down obvious to anybody's eyes here when you are looking at AI, but it also didn't run away from the gap as well. Gap down, no rundown, little gap down, gobble up type scenario. And so that it's going to be interesting to see what does occur as you have a massive support test against AI. Keep an eye on this company. If it does go through a little bit of a support build, holds firm against $20, I don't think the earnings report was nearly as bad as the price action suggests here on C3. Now on AVAV, another AI name in the marketplace as well, they came out with a good beat against expectation, 20% beat, 89 cents against the 61 cent expectation. Revenue also topped $5 million, 189 versus 184. That represented 24% year-over-year growth. They also reaffirmed forward-looking guidance as well. When you're looking at it from a technical perspective, quite frankly, this is what I would have expected to see a little bit with the earnings report out of AI, a little bit of a fading price action as we saw in AVAV. This is a little bit more accurate in pricing, in my estimation. A good beat, but not an increase in guidance. And in AI names, reaffirming guidance is not good enough in this environment. You have to increase guidance. Remember, NVIDIA increased guidance and it wasn't good enough. So companies that are tied to this right now, obviously there's a growth concern here. And so with AVAV, AI, both of those companies reaffirm guidance. Both of those get a little bit of selling behavior. I think it's due to the environment a little bit more than these individual companies themselves. And then the third stock story here today is obviously NVIDIA, as NVIDIA has just been in the news all week long. They were the stock that led the selling behavior on Tuesday because there was a leaked report that I forget what news agency put it out there. It might have been the Wall Street Journal, but there was a news report that basically said NVIDIA was going to get subpoenaed. NVIDIA went down 10%. NVIDIA came out yesterday and tried to clarify the situation by saying, we don't know anything about any subpoena. And then NVIDIA contacted the Department of Justice to ask them about any subpoena, and the Department of Justice didn't know about a subpoena either. NVIDIA basically stated, we are more than welcome. We are more than happy to discuss any of our business models or business activities with the Department of Justice. I just wanted to give a little bit of a clarification to that storyline, as obviously they have been all over in the news. Now, very quickly, there have been a couple other reports that I just want to look at just from a very rapid fire perspective. NEO here also reported, and they're getting a little bit of liftoff coming from a really low point on the chart. And you got to like this little bit of a trend violation on NEO as well, as they did report a 34-cent loss, but they did beat that expectation. So a little bit of a better loss. They did come in with a -34. It was expected to be -46. They did beat on the revenue side of the equation. So they did come out with beats and a beats. They don't provide guidance. Obviously a challenging environment from a long-term perspective. The environment has not been good for Chinese companies. The environment has not been good for EV units. But what we are seeing a little bit just over the last couple days is Tesla starting to fire off a little bit, violating that trend line as well. You're seeing a little bit of price action on Tesla. We actually had that for a volatility build on our traders report this week. NEO showing a little bit of love coming from the low point in the EV space as well. And then the last stock story, very quickly, rapid fire style. Verizon is looking to announce an all-cash acquisition of Frontier Communications for a whopping $20 billion.
Now, listen, that's some good information there. It was Bloomberg that reported that NVIDIA story that that nobody seems to know anything about. Gold looking good. The dollar, if you have a weak economic unemployment report tomorrow, Matt, the dollar's going to break. That's going to be supportive of gold. We'll take a look at that chart. But the big news in the commodity world today is OPEC delaying their planned increase of production. Now, for those not familiar with this story, several months ago, OPEC announced that they were going to be increasing production at the end of the year. Well, they have now pushed that back. Obviously, lower oil prices are influencing this decision, but it has shades and reminiscence of an OPEC that has been very supportive in the creating stability in the oil markets. Now, stability is not something we've had for several months in oil, as we've had wild price action back and forth. But OPEC coming out and saying, listen, we are not going to do those planned production increases. We'll put them off for a couple of months. Obviously, price has a lot to do with that. It's going to be very interesting, Matt, if we start to see smaller ranges now. If we start to see smaller ranges, that's something I'll be looking for in the coming weeks.
Yeah, I would be interested in the volatility declining and pattern recognition and all of that jazz. I'd be very interested in that. We just haven't gotten that ever since OPEC pulled the rug from the market in June by basically making the announcement that they are no longer going to be seeking to voluntarily cut. They basically removed if you remember the moment when the Fed removed the Fed put from the environment, we saw volatility spill into the market in 2022. Well, that's kind of what OPEC did in June. They pulled the rug from the market by saying, hey, listen, we no longer have your back. And ever since that moment, you've seen random price action, volatility price action. And yeah, now that OPEC is coming into the fourth quarter and now they're facing the decisions of removing those cuts from the equation, now they're second guessing themselves. That does not give me confidence in OPEC, quite frankly. And so, yeah, I'm with you. I would like to see the volatility decrease. I would like to see a support build here. But at the end of the day, I don't have confidence in OPEC and their decision making. And I don't think the oil traders do either.
Yeah, no, this is they shattered some faith a few months back with their decision. It might take more than a statement to reestablish that faith. Gold, let's finish off with gold and call it a day, Matt. Good look for gold as we head into the unemployment report. Once again, stop me if you've heard this story before. Had a chance to sell off, did not want to take advantage of that. I mean, you were below the 20-day moving average yesterday, Matt, and you had support level breaks. And then gold said, oh, yeah, we don't like going down. Set up for a nice potential catalyst driven breakout, whether it's today on or tomorrow on unemployment or next week on any of the inflationary data that's coming out.
Yeah, good. Very impressed with gold, and get ready for a breakout there. Yesterday, I was talking a little bit about silver in the Traders Lounge, talking about how I felt $28 was going to prove to be a support level, and a big green candle was going to come to a theater near you. I was actually thinking that was going to be on labor market data, not here today, but we are getting a little bit of violation of that bearish retracement on the dollar with a little bit of confirmation here today. And so obviously an improving condition in the commodity space, precious metal space. Gold, you got to be looking at a potential breakout. On the silver and the copper side of the equation, it's not going to get clean until you start getting back up above 30 in a violation of that trend. But I do like the edge on silver, and I do like the edge based on what's happening with the dollar.
Yeah, absolutely. We're going to continue looking at all these charts on the Traders Lounge. It's amazing pro community. Come join it. Go to tackletrading.com, sign up for a 15-day free trial. See what it's all about.